Hello and good afternoon. You're watching Closing Trades on 80 now. I'm Anisha Jain. With me is Avan Dubash, and it doesn't turn out to be a good day of the trading session. So far, at least it's belonged to the bears. Yes, we have managed to defend that mark of 18,500, but nonetheless, there is a bit of weakness which is visible across the board in global equities as well, with sharp cuts coming in Hang Seng and the other European markets as well. And that is what is pressurizing the Indian markets as well. It's the heavyweights which are again dragging their feet. So Reliance, HDFC Twins, these are the top stocks which are adding almost 60 points on the downside for the Nifty. Top sectoral loser continues to be the banking index, almost 500 points lower as far as Bank Nifty is concerned, and quite a bit of decline today on Axis Bank specifically. That stock is down almost 3%. Yes, there were expected to be some MSCI based outflows, but not that much is what the street was expecting. What's really standing out today is IT and Pharma. Pharma specifically has seen quite a bit of up move today. In fact, the Nifty Pharma Index has managed to move above the 200-day moving average. The 50-day moving average has also moved higher over the 100-day moving average. So looks like the technical factors are at play. But a lot of fundamental factors as well to watch out for, Avan, right? We have that important US vote coming in. The auto sales data comes in tomorrow. And then, of course, the GDP to watch out for as well.
Absolutely. So macros as well as a lot of other key data points that we'll be tracking across the globe. But Anisha, let's keep it with stock-specific action as well. And here are some of the stocks that are in news today. You've got Torrent Pharma. That stock is really scaling new highs in trade at an all-time high, actually, as there's been a robust performance in its quarterly numbers. In the branded generic segment in particular, the growth momentum is likely to sustain in India and the overseas market. And all of that has been reflected in the stock price from the word go. Moving on, then Sona BLW as well is buzzing in trade today. The promoters, we understand, are likely to offload stake, and there's also that MSCI adjustment inflow to the tune of about $170 million. And watch out for Eureka, Forbes. We'll get you a lot more perspective on that one, but it certainly is a buzzer in trade today, as in the conference call, the company has come out with multiple highlights, strong Q4, reduction in net debt, margin expansion, that and lots more. Time to connect then with our chartists and our guests joining in on the show. We've got with us Samit Chavan as well as Naresh Merani, who are joining in on the technicals, as well as Pawan Parekh, Director and Fund Manager, Renaissance Investment Managers. Good to have you all on board. Naresh, why don't I start off with the niggling worry in the markets today? The Nifty Bank Index, as Anisha flagged off, under pressure with a heavyweight like Axis Bank declining nearly 3%. What's your view?
So the viewers, we broke out into a new all-time high on Bank Nifty, but we've not seen a similar all-time highs being made in the constituents. We've not seen HDFC Bank, the largest constituent, make a new all-time high. ICICI continues to struggle at that 950 mark. And today we've seen a bit of a pullback in Axis Bank. So if we have to sustain the all-time highs, it should be along with the whole, say, heavyweights in the index making new all-time highs, which is not happening. So we have some more time to be spent here at 43,500 to 44,500 before the next move comes in. But overall, the structure remains positive on the Bank Nifty. Same is the case with the Nifty. The dip is a good opportunity to buy in this as closer to 18,500 and a stop loss below 18,400 and a bounce back from these levels. So overall, a little bit of a pause, but the trend still remains up.
What's your take at the index level? What's the trade ahead of the weekly options expiry that we have tomorrow? And a word on Nifty Pharma, because that's showing quite a bit of momentum at this point of time. Samit, the question is for you.
Okay, can you please repeat, Anisha?
My question was, A, at the index level, any trade ahead of weekly options expiry? And secondly, the pharma index is looking quite strong.
See, as far as Nifty is concerned, yes, we witnessed some profit booking today, but it has to do with the global concerns. But overall, if you see on our domestic market, we remain a bit. The overall structure is quite sturdy, and Nifty has tested its breakout point, that is around 18,500, 18,480. So we expect this dip to get bought into, and hence with the buy and decline strategy, one can use this decline to go long at current level. As far as spot levels are concerned, one can keep a positional stop loss of around 18,430, and we would expect Nifty again retesting 18,700 and 18,800 in coming days. So overall, the bias remains positive. It's just that we have been continuously moving higher. Globally, we saw some profit booking, some nervousness, and that has clearly had the rub-off effect on our market today. But overall, we remain quite sturdy and we expect upward trajectory to continue in our benchmark index. See, as far as Nifty Pharma is concerned, recently we saw the entire pharma basket, finding its mojo back. As far as Nifty Pharma is concerned, it's on the verge of a breakout. So 12,800 is the level to watch out for on the Nifty Pharma index. It is quoting somewhere around 12,700. Once it surpasses 1200, it could confirm a near-term breakout, and then probably we can see a extended move. Another 4 to 5% up move is clearly on card. So overall, the bias in key indices also remains positive. And as far as pharma space is concerned, we remain quite upbeat with Lupin and Aura Pharma being the top performers in this space.
All right, there you have it. That's the view coming in on some of those pharma stocks. Meantime, Pawan, let's get in your take on the markets as well. As we were highlighting at the get-go, there's a lot of events that the street will be tracking. And given that we're close to those all-time highs, what do you believe is likely to lead the direction forward? Do you think that the undertone of the market is looking positive?
Yeah, hi, good afternoon. So the undertone is very clearly positive in my opinion, for the simple reason that slowly we're seeing consumption also coming back. The manufacturing part of the economy, which was ailing for many years, you've seen last year or 4 5 quarters, a lot of these companies like ABB, Siemens, L&T are reporting robust numbers in terms of both order book growth and margins. And as the consumption part of the economy also starts firing in, I think we've got all the engines firing for the economy. So take a 2 3 4 year view. My view on the markets continues to remain very positive, and I must tell that this time around, the rally is going to be far more broad based, unlike a very narrow kind of rally that we saw during the 2016 to 2019 period. So there are a lot of sectors, there are a lot of stocks across all large cap, mid cap, small cap, which we think should do very well, and the undertone very clearly remains positive.
Okay, so the undertone remains quite positive, but one stock which has been doing quite well of late is Eureka Forbes. Actually, not just today when the stock is up 10%. Let's pull up the 3 or a 5 day chart of Eureka Forbes, because of course the numbers were good. This was the first time that the management actually held the con call, and the street was quite excited to hear what Pratik Pota had to say in the call. And as a result of the commentary coming in, that stock is up around 35%. Let's go across to my colleague, Vinny, to try and understand what the internals of the earnings were and what's the street banking on, Vinny.
So Eureka Forbes has reported the numbers a couple of days back, and what we're seeing is a strong up move coming in the stock since it reported its numbers. It was overall a strong performance we saw from the company in Q4. Margins were also much better than what the street was expecting. Operating leverage was something that aided the margins of the company. And when you look at the margins, this is the EBITDA margins I'm talking about. So 300 basis point expansion in terms of the EBITDA margins. 9.3% is what they came in at versus 6.3%. There's an exceptional item also which is included overall when you look at it in terms of the numbers. There's which is to a portfolio rationalization, but even then the numbers were quite good. Lower financing cost is something that is aiding the performance of the company. Reduction in the net debt will allow more headroom in terms of the investment for growth for the company as well. Let's look at what the key con call takeaways were coming in as well. The company said that they will continue to grow categories like clean and air and focus on premiumization, operate a leaner cost structure as well. So that will lead to a better in terms of productivity, in terms of the operations as well, improvement in terms of margins. They'll significantly step up their capex plans in FY24. So that means more growth going forward as well, and projected to achieve that projected growth, that capex plan is also going to be increasing. Going forward, they'll be focusing on category growth as well, and they will invest in D2C channels, strengthen the digitalization and D2C platforms as well. Consumer demand, they said that yes, a bit subdued in terms of the trade over there during the quarter, but expect festive season is something that will lead the growth in terms of improvement going forward. They're expecting margin expansion, which will drive future growth and focus on customer services. So yes, all in all, good commentary that came in from the management, as well as a good set of numbers from Eureka Forbes, and that is why we're seeing in the just couple of days the stock is up almost 15 to 20% in trade.
That sure is a smart move, 9% on Eureka Forbes. Pawan, your outlook then on the FMCG sector. HUL, for instance, has perked up in trade. You'll have the likes of Britannia as well as GCPL, all in the spotlight. What is your expectation down the line when it comes to consumption trends, volume growth?
Yeah, so I think consumer is quite a mixed bag, because you've got some companies on one end which are seeing the resumption in rural demand, and then if you see at the quarter four commentaries, a lot of the companies are also mentioning that for their products, they're not seeing rural demand coming back. But if you want us to take a holistic view, because as far as FMCG sector is concerned, rural consumption is a very big portion of their revenue. My opinion is that, somewhere during the quarter 2 end or quarter 3 of this financial year, we will see the predictions are for normal monsoons. And if that were to happen, what we would see is resumption in rural demand as well. Because one good thing from a rural point of view that's happened is that inflation has moderated, right? Very clearly, as inflation starts moderating further, demand, there'll be more surplus in the hands, which will come back to spending. So take a 1 year view. I think, a lot of these stocks in the staple base, which have lost its mojo in last year, 2, 3, 4 years, should start gradually looking a bit exciting from here on.
Already seen in the FMCG names, and today as well most of these counters are sitting at the intraday high as we speak. But let's talk about some price volume buzzers as well. NTPC actually seeing a breakdown from the upward sloping support. The pattern resembles a bearish belt hold, so NTPC is in focus on account of that. One of the big drags at the index level, 2% lower. The biggest drag, however, is Axis Bank. That's down almost 3%. It snapped the 4-session streak of higher lows. Biggest single session decline is what we are witnessing on that counter in a month's time. And then of course, on the positive side, there's Dixon Tech, which has hit a 4-month high on an intraday basis, and volumes too are supportive, 2x the 20-day average that we have seen. Pawan, I'm not sure if you can talk specifically about counters, but Axis Bank, a curious case because that's actually seeing a cut of almost 3%, and even the likes of Kotak, etc., haven't participated yet in the rally.
Right. So I think, I think growth-based investing is the norm of the market for last 2 years or so. Whichever companies have actually lagged a bit on growth, those stocks have either fallen, have done nothing. I think for both these stocks, if you look at, while the entire banking space has done very well, their growth has been a bit moderate. And when I say about growth, I'm talking about loan book, because Kotak has delivered very strong improvement in NIMs, which has led to profit growth, but loan book, except for last 1 or 2 quarters, has been a little moderate. So in this counter, in this space, as long as investors don't see a visible pickup in growth, I think these stocks will remain sideways for a long period of time, because from the entire sector point of view, if you see, there are a lot of investable options available. You've got HDFC Bank, you've got ICICI Bank, you've got NBFCs, you've got large NBFCs, you've got microfinance. A lot of the sub-segments within the BFSI space look very interesting. So when the choice is abundant in that kind of a scenario, wherever you see some small concerns, those stocks are likely to remain sideways until you see a visible pickup in growth.
Spoiled for choice when it comes to the BFSI space, and if you're not one of those top performers, maybe there are other better names available for you to invest in. But on that note, we're slipping into a very short break with the news that the market has recovered a bit. If you look at the Sensex, it's seen a recovery of almost 200 points. The Bank Nifty is also, the Nifty also is almost 50 points off the lowest point of the trading session. So looking better, but let's see how the last 30 minutes of the trading session pan out, because that is when we'll see the MSCI impact as well. So slipping into a very short break.
Good to have you back with us. This is Closing Trade, skirting around the 18,540 mark for the indices, and for now it continues to remain a flattish day of trade, while yesterday, of course, we were constantly monitoring whether or not we were going to hit those life highs. Pharma is supporting, so is IT, but on the flip side, banks are taking a bit of a back seat. Heavyweights like Axis, as we pointed out, are under pressure, and the PSU banks, it's no different. And add to that, you've got the entire metals basket as well. That's pretty lackluster. But auto in the spotlight, and that's largely because it's that time of the month when the street is going to look at the wholesale dispatch data from the entire auto sector. Now, two-wheelers may have seen a boost, but it's expected to be a bit muted when it comes to the industry as a whole. Let's take it across to my colleague Shrishti Sharma, who tracks the sector closely and now joins in with what to expect. Shrishti?
Well, yes, you're waiting by for the May auto sales data that will be reported tomorrow, but the expectation is quite muted this time around, a muted sales growth across the segment that we are expecting. But the key to watch will be the recovery in the two-wheeler segment, because what the reports are highlighting is that because of the marriage season, this particular segment is expected to catch up, and even the export sales data from companies like Bajaj as well as TVS is expected to see a single-digit growth uptick. Other than that, let's have a look at what the expectation on on number is. For Bajaj Auto, we are expecting a 14% jump on a YOY basis, and for Hero MotoCorp, sequentially we are expecting a growth out there. For TVS Motors, the story says that on a YOY basis, that could be just a flat growth for this one. But for Eicher Motors Royal Enfield, a growth of 17% on a YOY basis, a number close to 74,500 unit is what we are expecting. Let's talk about the passenger vehicle segment, because over the months we have seen the demand holding strong and a similar story expected this time. But in that, the CNG sales is picking up post the revision of the CNG prices in Delhi, and that could be a factor for a case like Maruti. And if we talk about the numbers this time for Maruti, a muted sales growth. If we talk about for companies like M&M as well as Tata Motors, a similar story is expected over there. Coming to the commercial vehicle segment, because in the month of March 2023, we have seen a lot of pre-buying. On the month of April itself, we have seen an effect of that, and that same story is expected for the month of May, wherein if you will see, then a good downfall on a YY basis is what we are expecting, and a muted growth on a month-on-month. And in the tractor segment, we are expecting that Escort sales could see a jump of 8% on a month-on-month basis, and even the share is doing well today. But on the flip side, M&M sales is expected to decline by mere 2%. So that's the expectation, but the key to watch will be the two-wheeler segment.
Thanks, Shrishti, for joining us. So a bit of a weakness and muted numbers are expected from the auto sales this time around. But Samit, if you had to pick your top bets from the auto sector, if you probably are looking at buying at a correction, what would those stocks be?
See, undoubtedly, the top pick would be Tata Motors. The kind of performance this particular stock has in last couple of weeks, the overall chart structure looks quite sturdy, and we can see a series of higher highs, higher lows. And recently, stock gave a massive rally, which was then followed by a good consolidation. So stock is in process of forming a kind of bullish pennant or bullish flag pattern. So once it breaks out from 530, we could see this rally getting extended towards 550 or beyond level. So obviously the top bet remains Tata Motors. And from the two-wheeler space, we like Hero Moto at current level. This stock has spent a lot of time, in this range 2600, 2800, and it is now on the verge of giving a breakout from its massive multi-month resistance level. So we expect 2850 to be taken out quite soon, and hence within the two-wheeler space, Hero Moto would be our preferred bet.
The stocks which are doing well from the frontline index include names like Bharti Airtel, which is suddenly up around 3%. Tech Mahindra is doing well in the trading session. In fact, a lot of IT names from the broader markets are also bouncing back, whether it's KPIT Tech or Ascient or even Birlasoft for that matter. Quite a bit of momentum in these names. Nuresh, what about the IT counters? At least in the mid-cap space, we have seen quite a bit of recovery. Would you still be a buyer in some of these names?
So I'll be focusing stock specific here. Some of the names like HCL Tech is one which looks a promising one in the larger space. The stock is setting up for a big breakout over that 1150 mark. So that is one. Second is Tech Mahindra, which has spent almost 6 months consolidating. Even a similar price point here, sustaining 1130, 1150, that would be a breakout. Names like KPIT Tech, etc., which have gone up a lot. Time to be careful here is look to book profits in a lot of these names which have become highly overbought. But the names in the larger mid-cap space or large cap space like HCL Tech, Tech Mahindra look like say another 10% is possible in these names.
Okay, meantime, Samit, let's also get in a view as to what your outlook is on some of the movers within the broader markets. You have something like a Bharti Airtel as well, which is looking comfortable around the 840 mark. And within the pharma space as well, there's quite a bit of traction. Sun Pharma, Aurobindo, etc., all looking smart. Biocon as well in trade. What would you pick out within pharma?
See, within pharma, as I said, that the top picks would definitely be Oro Pharma and Lupin. Oro Pharma, has been laggard for a couple of years at least. It has formed a strong base a couple of months back around 400, and from there has been no stopping. Importantly, this rally is backed by robust volume, so that clearly indicates there's a strong demand, buying interest in this particular counter. Stock has confirmed its yet another breakout beyond 655, so we would expect this stock heading towards 680, 685 in next few days. Apart from this, Lupin has been a steady performer. Stock has already confirmed its multi-month breakout from the levels of 795, 798 a couple of days back. So we would expect Lupin to do well. The next levels to watch out for would be around 845, 850 in case of Lupin.
So those are the top pharma names on the chart. But Pavan, if you had a blank check at this point of time and if you had to make investments, what are the 2 or 3 stocks that come to your mind?
Rather than giving stocks, I would rather give sectors because because
Sure.
of compliance restrictions, we're not allowed to speak specific on stocks. But in terms of sectors, I can definitely tell you three sectors which come top of my mind is first is BFSI, which includes both banks and NBFCs. Second is auto, and third is consumer discretionary space. I think for all these three sectors, India has got a huge runway of growth available. A lot of these companies in these sectors are really blue chip by nature, very strong balance sheets, very strong promoters, and most importantly, a lot of these companies are well placed to deliver growth despite a short term.
Sure.
Even if you have,
No, Pawan,
even
I
if you
just
have,
wanted to scratch that point further. When you say auto and consumption, these are two big sectors. Break it down for us. Two-wheelers, four-wheelers. Are you looking at the EV bets? And similarly in consumption, is it QSR? Is it your fashion retail? What's really catching attention?
Right. So within the auto space, as we just discussed about a couple of minutes back, two-wheeler sales are way below their last highs of 2018 and 19. We think, in next couple of months, the rural recovery should happen and two-wheeler sales should bounce back. In that kind of a scenario, if there are two ways you can play two-wheeler sector, one is through the OEMs and second is through auto ancillary. We are more positive on the auto ancillary space because there are a lot of companies in the auto ancillary space which are developing some very niche products for the electric vehicle space, and most importantly a lot of these companies are developing new products, new technologies which will enable them to grow faster than the sector growth rate. So within that space, auto ancillary, especially auto ancillary companies which are exposed to two-wheeler space, look pretty interesting to us. On the consumer discretionary side, I think, apparels, footwear, uh, even for that matter, I would call, a lot of these companies in EMS space, which also, in my opinion, fall in the consumer discretionary space. A lot of these companies have got very, very, very promising outlook. EMS space in specific is benefiting from China Plus One and PLI tailwinds. So, these are the few pockets within the larger umbrella where we think a lot of money can be made in the next, say, for example, 6 months to 1 year.
That's interesting. Lots of themes that you're closely tracking. But let's get in those BTST trades going as well. And Samit, run us through your calls.
See, the telecom giant Bharti Airtel is there on our list. It would be a preferred bet considering its recent price action. Today, we are seeing good traction in this counter, and the stock is clearly moving higher. When we had spotted, it was somewhere around 836, so it has moved up a bit. So 854, 860, these are the targets to watch out for as far as Bharti is concerned, and 828 can be kept as a stop loss. From the banking, mid-cap banking name, we like RBL. Considering its last couple of days price action, stock has already surged and confirmed a inverse head and shoulder pattern breakout. Today we are seeing some, profit booking, but we would consider this as a good buying opportunity. Stock has given a precise pullback around its breakout point, so 156 can be placed as a stop loss, and we would expect this stock heading towards 165.
Okay, thanks Amit for joining us with those takes as far as stock recommendations is concerned and talking to us about the technicals of the market. Pawan, we'll let you go as well. Thank you so much for joining us today. But on that note, slipping into a very short break with the news that the market continues to be around the 18,530 mark. We'll track the last 30 minutes when we come back. Welcome back. Last 30 minutes of the trading session left, and for now we're just around the 18,520 mark. It's the bank Nifty that continues to see quite a bit of decline today, 400-point cut. But having said that, it's the broader markets which is showing quite a bit of outperformance. So whether it's the mid cap or the small cap space, that's holding up comfortably in the green. In fact, close to the highest point of the trading session, and even the advanced decline ratio is looking quite impressive. Sectorally speaking, apart from pharma and IT, which have been doing well since the start of the trading session, you suddenly have realty, which is perking up. up. So pull up a Brigade Enterprises, a Lodha, a Mahindra Lifespace, Prestige. All of these counters have suddenly seen a very sharp surge, so that entire space is in focus at this point of time. Let's discuss that further with our guest on the show. Varun Sabu joins us from Anand Rathi, as well as we have Kush Bora joining us on the show for the technicals. Varun, let me first come to you. What's happening with the real estate stocks and what would be your top bet?
Yeah, hello. Thank you very much again, Ikina, for inviting us. So real estate is just reflecting the wealth effect which is happening in the country. If you see the kind of wealth which people are making overall, be it equities or any other asset class, that's clearly reflecting in the demand which we're seeing in real estate, the kind of sales we're seeing. You look at projects, anything which is getting launched, quality projects, they're getting sold immediately. So yeah, I think that's what is reflecting in the stocks. And not only real estate, I think any consumer discretionary, consumer staples also, I think is going to see the same trend in times to come.
Okay, let me get a technical perspective as well. Kush, from the entire sector, real estate, what looks strong on the charts?
When it comes to the real estate sector, I'm sorry, it always helps to be with the leaders. DLF is has been doing well. It's gone into a bit of a consolidation, but I suppose this is just the consolidation after the smart run up that we've seen. So I wouldn't be surprised a further up move till 505, 500 and 525 levels on this one. A fresh entry would warrant a stop loss at about 465 levels. So DLF could continue the further could further continue the momentum that we've seen over the last month and a half.
Okay, meantime, wanted to also get in an outlook then from you, Varun, as to what your view is, given the fact that a lot of these large caps haven't really performed at a time when the index is looking to scale those new highs. The fact that, the likes of HDFC Bank, Reliance Industries, for instance, haven't quite played catch up, a lot of the tech majors as well. What's your outlook?
So in fact, I'm a little concerned in terms of the indice when it comes to the indice from here on. My reasoning is more around banks, as you were questioning about that. So I don't think that the larger banks would perform too well from here going forward. I would be very selective in the banking pack. I would be positive on IndusInd Bank and Bandhan Bank. Bandhan has been the pick which I've always highlighted on your show. I've been coming here and I've been highlighting. I think these two are the ones which would stand out because they are the only ones where you're going to see margins holding up or margins increasing a bit. Other banks are going to be seeing NIM compression in an interest rate pivoting scenario. In fact, my whole thesis is that larger banks would probably correct or stay here in the near term, say the next 3-6 months or a year. But I would be more bullish on NBFCs, particularly HFCs, something like an LIC housing or a Canfin Home. Additionally, I would be bullish on Mahindra Finance, and we are extremely bullish on the microfinance space. In fact, as a house, we initiated coverage a couple of days back on microfinance on Spandana, on Fusion, and on Credit Access, and we are extremely bullish on these names. Yeah.
Okay, Spandana, Fusion Micro and Credit Access, those are some of the stocks that are closely being looked at. But let's also get in a sense as to what the buzz is from the dealing rooms. My colleague Sharad has been working his phone and now joins in to give us all the latest updates. Sharad?
Well, yes, in focus we're having Gravita, and what we are hearing from the dealers is that domestic fund buying is being seen in the stock itself, and dealers suggest that Nomura might be increasing the stake in the company. Now, do remember on May 29th itself, in the bulk deals, it was reported that Nomura had acquired roughly 32.5 lakh shares. Now, this translates into roughly 4.6% stake, which was sold by promoter Rajat Agarwal, and the total value of the sales was roughly 181 crore rupees. Now, dealers are expecting that more block deals might be there on the anvil in the coming days itself, where the promoter might be selling stake. And do remember, strong hands have actually absorbed the stock during this sell-off. Now, there are key investors also there in the stock, which include Goldman Sachs and ace investor Ashish Kacholia as well. And looking at the stock itself, it has risen by more than 14% over the last 5 sessions, and the current market cap stands roughly around 4,200 odd crore rupees. But the important thing is what are the key triggers for the stock, and do remember the company deals in the recycling space and they are targeting a 25% revenue while a 35% growth in the profits by 2026. Now recently they have also announced that the Chittoor plant, which is in Andhra Pradesh, has increased its capacity by almost 69% on a year-on-year basis. And lastly, the recycling theme, that is something where the traction is happening, and the company has also done a fundraise on that theme.
Sharad, thank you so much for getting us that cover from the dealing room. So Gravita India and focus on account of that. But let's pull up some of the other top buzzers. Look at Jindal Saw. That stock is up around 17%. Let's pull up the intraday chart of today as well as the last 3-4 trading session, because if I have it right, that stock has been on a tear off late. So today high by around 15%. 7-day chart suggests that it's 27% higher. And let's pull up maybe a 1-month, 3-month chart as well, because the earnings were quite decent from the company. And since then, we have seen a massive run up, a 50% uptick on Jindal Saw in 1 week itself and in 1 month itself. And NMDC Steel is the other one which is perking up. And Sona BLW, let's pull up that one as well, because the MSCI flow impact is happening as we speak. So if you pull up the intraday chart of Sona BLW, that will tell you from that flat level, it's suddenly seen that spike because that inflow of the MSCI flows has happened. Nuresh, your view on Jindal Saw, NMDC Steel and any other metal name if you like?
So Jindal Saw has given a huge breakout. If you look at a little longer term chart, the stock used to be 240 back in 2007. So that's the trend change. There should be somewhat of a fade off. And this whole saw pipe companies look interesting. We've seen Maharashtra Seamless come back to 2000, across 2008 highs. Jindal Saw has come back. Yesterday we saw Welspun Corp come out with very strong results. That looks the most promising one in this segment, because that is a stock which is yet to go back to those 2007-10 highs. So overall, the saw pipe segment as such looks interesting. We've seen even a Man Industries do well over the short term. So on a fade off, one could still be looking at a Jindal Saw closer to 220, 210 levels to be a buy.
All right. Meantime, Varun, wanted to also get in your take as to what you've made of the overall earnings season gone by. Have there been any particular sectors that have impressed on the upside, and thereby you'd be looking at some fresh positions here?
So, this earnings season wasn't expected to show as such any fireworks. I mean, if you see consumption part, which is now picking up, should start reflecting. What we saw post Diwali was that there was a lot of inventory build up, which was getting cleared currently. Going forward, we don't have too much inventory now, so things would start picking up materially going forward. I think in the coming quarters, the reflection will be there of the kind of consumption boom which is happening in the country now. So I think the earnings season was kind of okay. There was no such surprises, and I don't think so that there were any such negatives also overall. Few pockets did well. Cement pack was kind of okay. I think banks did well, but banks were expected to do well. While the concern in banks is going forward that your NIM compression will happen. So the ones which haven't done well this time are the ones to look at for the coming quarters. Yeah.
Let's look out for those non-performers, but on an intraday basis, pull up Zomato, because that's also surging as we speak. So that last 30 minutes of trading session is where we are seeing a lot of action. That too has suddenly spiked, as well as the other names in terms of Max Healthcare, which is again a reaction coming in for the MSCI inflow. You have also names like Finalex Cables, etc., which are tracking quite a bit of momentum at this point of time. Varun, what's your take regarding Zomato, if you all have been tracking that one, as well as the other new age tech companies, the likes of Nykaa, Paytm, PB Fintechs of the world?
We don't cover it actively, but yeah, I think these are great promising plays. These are the ones. So I'll just give you an anecdote. Our teams, there were about 13 teams from Anand Rathi which traveled across India. There were 25 people which went across India, and you won't believe the smallest of places now, tier 2, tier 3 towns, you're seeing presence of Zomato and Swiggy there. So that is explaining to you the kind of penetration that these companies are already seeing. And the usage part has increased considerably. I mean, I was surprised to see it in a small place named Bandara in India, right? So I'm just giving an example that things have started looking up for these companies. And yeah, technology per se, things are picking up. The use of technology across India is significant. Even in tier 4 towns, you see UPI being used. So that's the change that India is going through. And these companies will reflect that in coming times.
Yeah, I think on a daily basis, I've forgotten the last time I actually carried cash and used it. It's UPI or your cards, etc., that you use for most transactions. But since we're seeing a lot of reactions on stocks which are seeing MSCI flows, let's go across to Somit to get a gist of which were the companies that we were expecting inflows in and which were the companies that were expected to see outflows. Somit?
Well, the MSCI changes which were announced earlier in the month. Now, the adjustment date is today, which means that the inflows and outflows regarding the exclusion, inclusion, and weight increase or reduction is expected to happen today. So, the stocks that would be in focus, firstly, on the back of inclusion, it's Max Healthcare, Hindustan Aeronautics, and Sona BLW, which would be in focus, and inflows are expected to be in the range of around 170 to 300 million US dollars, which is nearly 7 to 9 times the 20-day average volume. In case of exclusion, it's Adani Transmission, Adani Total Gas, and Indus Towers, where there could be an outflow of close to 84 to 190 million US dollars, which is nearly 5 to 10 times that 20-day average volume. Now, Kotak Mahindra Bank, that stock would remain in focus on the back of weight increase for Kotak Mahindra Bank. There's an inflow expected of close to 800 million US dollars, which is nearly 8 times its 20-day average volume. Other than that, there is ONGC, Ultratech, Indigo, NTPC, and Power Grid, which could see inflows of close to 50 to 70 million US dollars. And then there is JSW Steel, Shree Cement, and BPCL. Now, these three stocks would see an outflow of close to 73 to 35 million US dollars, which is nearly 3 to 5 times that 20-day average volume.
Okay, so those are the big reactions that we are witnessing at this point of time. But one space which now seems to be a consensus buy, apart from, of course, the banking world, is the manufacturing theme, right? Whether it's defense, whether it's capex-driven industrials, or these electronics manufacturing companies as well. They're all talking about quite a bit of order inflow. The PLI schemes is something which is a bit of a tailwind. How are you looking at this sector, and what are the top picks there?
Absolutely. We are also quite bullish on this space. We were quite bullish on Dixon, the way the stock has rallied now. I think there are still legs to it. We are already seeing the kind of orders that they're winning. It's visible in the... So ultimately, the demand traction which I'm mentioning is going to reflect in all these companies. You are already seeing ABB, etc., doing exceptionally well. Something like Cummins, which reported quite decent numbers. The commentary of the management also, I was there on the call, they were so bullish on the kind of pre-buying that they're seeing. Also one has to keep in mind the way demand in terms of say anything, say power is increasing in the country, you will see a lot of traction around these companies again. So yeah, I think things look very promising from the cap goods space also. The manufacturing themes, and yeah, I think I'll be very bullish on them still.
We have spoken about this, but I just want to bring back the discussion on Torrent Pharma as well as HDFC Bank. HDFC Bank just refuses to participate. What's that level, or what's that big marker that might change the momentum for this one? Naresh?
So for HDFC Bank, the range is 1550, 1580 on the downside, which has been supported. The last time we saw a gap up was on MSCI, possible rejig on the upside. That is the time we went up from 1550 to 1630, 1640 levels. Then again, we saw a spike up to 1730 on that possibility. And then we've seen the other side. Again, we are back to 1600 levels. So till the time we don't get that trigger, which can take it beyond that 1700, 1730 mark, we are stuck. So above 1730 is the price point where you say, okay, the trend has changed and we are getting into a fresh momentum. And 1550 to 1600 is a band where you, which was the stock price before the events being in play. So you want to be buying closer to 1550 and adding more on the way up to 1730. In the in between, you just want to keep it away.
Between, it's best to perhaps be on the sidelines. In the meantime, let's pull up the Bank Nifty. That's seen a considerable improvement from the lowest point of the trading session, almost recovered half of its loss because at one point of time it was down almost 1%. Now it's just 0.5% cut, and that's partly because of Kotak Mahindra Bank. Somit was just telling us that the weight of MSCI is increasing for Kotak Mahindra Bank, and that's exactly what has happened in the last 10 to 15 minutes. And also pull up a Bharti Airtel because that stock is now higher by 5%. Kush, what does the chart check suggest on Kotak Mahindra Bank and Bharti Airtel specifically?
So Kotak's a bit of a dark horse. I mean, we did see, a bit of a jump, if I say mid-March around, that's when the, momentum started. fizzled out, but good to see that it's back in action, and today's move is actually quite a bit of volume backed up move that we are seeing. So this is very encouraging. It's not participated in the rally for a very long time. So I think this momentum could further continue. 2100 and 2170 is where we see the stock headed to in the coming days, and a stop loss here would be around 1990. That's the level that we're looking at. So I think there is still a lot of up room left for Kotak Mahindra Bank to go to. As far as Bharti is concerned, fairly similar story. Almost about a rounding bottom kind of a formation that we'd seen, and today we're seeing a very clear breakout of that. This places the stock above its resistance zones of 850 and 860. So I think this momentum also could further continue. However, 900 being a psychologically resistance zone, the upside could be limited. So for this one, I would wait for a dip. Once again, if it comes to about 850, 860 zones is when I would take a fresh entry. In that case, 840 would be my stop loss, and 900 is where I would place my target.
Very commendable move, no mean feat for a heavyweight like Bharti Airtel, which is notching up. Just pull up that intraday chart, because that's a solid 7.5% on that stock, above the 880 mark. In fact, Varun, just curious to get in your take on Bharti Airtel. Just earlier this morning, we were discussing the sector as a whole, talking about how it pretty much seems now a duopoly, and Bharti Airtel emerging at the forefront. What's the view?
One sector which we don't track. But you're absolutely correct. If not a duopoly, it's still a three-player market so far. And seems like all the players are settled with the market share fight, which we were seeing, say, 2-3 years back. I don't see that coming into picture. Until the time that is not happening, these players can really milk it quite well from here, because what you're going to see is consistent rise in their realizations going forward. If we see that that they are content with the market share, which is happening, so that's visible. ARPUs have been slowly inching up, that we keep seeing every result. So yeah, I think these are great names to be in, and they've been consolidating for a while, so probably this is the time when they've just started moving up.
Okay, let's get in those BTST trades going as well and find out what exactly our chartists are tracking. Nuresh?
So one of my trades was Bharti, but it has already spiked up. So the only one which I would go with is Biocon. The stock is setting up for a move above that 250 mark. Tried to do that on the result day as well. Flipped back, and now last 2 days range has been taken out. So at 245, 246, this looks interesting as a risk reward trade. Stop loss at 242 and a target price of 255.
Push, what about you? What makes it to your BTST list?
Couple of steps. First one is Tata Motors. The momentum is still strong with this one. The stock, we suppose 535 is the next level to watch for, and we suppose 535 is the next level to watch for, and hence that's the target. 520 would be the stop loss. The second pick is actually an options trade. We believe that the profit booking round in Nifty and Bank Nifty both are actually done. There was a small gap to be filled, and that's been filled in the today's down move. So from here on, the indices could resume their up move. Hence, one could participate in Nifty via a call option. So 18,500 call option for the 1st July, which is tomorrow's expiry, is something that we have on our radar. 120 is our target. 45 is the stop loss. The calls already actually moved up 15-20 rupees since the discussion on the show started. So perhaps the level could be adjusted, but yeah, 120 is still what we're looking at as the target.
Quite a bit of up move on a lot of these counters in the last 30-40 minutes itself. And if you look at the list of stocks which are at 52-week high or all-time high level, that list is really, really long, and the ones at 52-week low, actually I don't have any stock today which is trading at 52-week low level. So that's telling you the kind of broad-based recovery that we are seeing in the markets, and the mid-caps and the small caps are definitely outperforming. Varun, you talked about the microfinance space that really stood out to you. Could you talk to us about which are the top picks there? What's the rationale?
So in terms of microfinance, we're very bullish on Bandhan Bank particularly, which I've been mentioning, as I mentioned to you before as well, and Spandana and Fusion. So these will be our top three, which we like. The rationale is simple. The kind of growth they're seeing, it's significant. We hosted some companies also to speak with investors across, and most of the companies were of the view that 25-30% growth is something which is a given, even in micro, and even if you have to additionally see, apart from COVID times, these companies never saw their NPA troubling them. COVID was a very different time. If you leave it, this sector is the most interesting one. They generally don't see NPA shooting beyond 1%. So That's the kind of business model which we're talking about, which people have lost faith on post-COVID. But we believe that there's a lot of value in them. Stocks like Spandana are trading at what, 1.1, 1.2 times book. Even like a Bandhan Bank is trading at some 1.6, 1.7 times book. These are extremely attractive plays for the kind of franchise that they have built over time. So yeah, very bullish on it.
Revisit Bharti Airtel because it's very sporadic moves that you're seeing in that stock. Just to think, a couple of seconds ago we were talking about an 8% up move, and now the stock has sharply corrected from those levels, just about sustaining around the 848 mark. Naresh, just given that this stock is, very active on the volume and price charts, what's your reading?
So actually, tough to make a reading now. The spike was too sharp thanks to the MSCI build-up. The build-up was basically that the stock should see an outflow, but seems like some shorts got trapped out here, and that's why the spike. But overall, 830 should be a stop loss, and closer to 840 is where you want to buy it.
Just want to map out some individual movers and pull up the month-to-date chart because who knew it's already the 31st of May. Time has clearly flown. And here have been the smart movers. Adani Enterprises in the last 1 month. And remember, a lot of the Adani group stocks from the kind of market cap erosion they saw from the Hindenburg reports have more than made up. And it's been a stellar move in this month in particular. 2488. There's Eicher Motors that has gained as well. Nowhere close to Adani Enterprises, but still it's a double-digit gain of nearly 12%. IndusInd Bank has been a very smart mover this month with an 11% notch up. Bajaj Finance has managed to hold out quite well, and HDFC Life too. In fact, just pull up the Nifty Bank Index on a month-to-date basis. It's gained about 1.7%, but it's been the IT index that's really pulled all stops. It's been a total sectoral outperformer with a nice 6.3% gain on the Nifty IT index. Not too far behind is, or actually that what's done better is the auto index, which has piled on a solid 7%. Real estate as well has built on gains this entire month, and that index too has gained very smartly, a nice 7.5% notch up. In fact, Varun, curious about your take within real estate making a comeback, your recommendations or outlook here?
So I think we'll still prefer the ones which hold land banks, and I would go with something like a DLF from here also. That would be the top pick over here. But I think majority of the run across this sector has happened, so they'll take time to move from here. So these will be good plays now with a 2-year perspective where you'll see compounding over a period of time. The rally has been sharp, so probably one can wait to accumulate would be the right thing, but business remains very strong for them.
In fact, let's get in your take, Kush, as to what the outlook is on the charts for an L&T, which actually this month has declined nearly 6%, and even UPL, which on the charts has had it a bit rough for the month gone by.
There is and I would probably rate this as a consolidation, with a mild negative bias. But this is perhaps a good time to get into the stock. The stock is now trading near its medium term support zones of about 2200, 2150 zones. So it's not a bad idea to get into the stock right now. Anyway, if we map, then this has been a late entrant to the entire capital goods party. So I think it'll probably continue, because there was sector rotation and we saw banking and IT do well. There was some love lost in this one, but otherwise I don't see any major structural damage. As I said, for a fresh entry, 2150 is where I would place my stop loss. I wouldn't rule out a move until 2300 and even 2400 levels on Larsen. As far as UPL goes, again, this stock is not something that that's very high on my radar. We've seen a very clear lower highs kind of pattern formation. So I would perhaps wait and watch. Any buying signals would probably be triggered once the stock crosses and sustains above 700. So UPL perhaps on my wait and watch list. L&T is something that I would add at current levels.
Okay, there you have it. That's the take coming in on some of those movers.